Welcome to this information video about ProcureAnalytiq. My name is Mike, and after operating in senior business roles for more than 20 years in finance, procurement and general management, I now run a business focused on cloud-based tools and consulting around procurement analytics. Now, before I launch into the detail, let me start with a quick reflection on why we focus on procurement analytics. In my business experience, raw material prices are the most critical driver of profitability and cash flow. But procurement is also a difficult functional area to get a full grasp on. And there are many different reasons. In some areas our suppliers are bigger and more powerful than us, so our ability to control the outcomes is limited. And in addition, procurement is a different skill set from other areas of the business, and too often not well enough connected to other parts such as sales or finance. But a key problem I often faced is that the analytics around procurement were not intuitive, and so led to confusion or a lack of clarity on where the opportunities are. One of the key challenges around procurement analytics is the core area of price trends. There are many potential impacts which can distort the analysis, such as product mix, foreign exchange, timing, one-off charges, savings, etc. In addition to which, the price analytics often exclude clear market benchmarks and trend indicators. And as a result, the analytics around pricing are not always set up well enough to answer the questions of many of the stakeholders of procurement, not only in relation to performance and outlook, but also in relation to reconciliation to other financial statements. Consequently, in this presentation, I'm going to focus on benchmarking the price analytics against the market. This is because it is the practice of external benchmarking above all others that helps to drive not only the insight, but also the final profit and cash performance. Some of those benefits include the reduction of effort in procurement, early warnings on price changes, the improved ability to explain trends and the outlook, and ultimately improved financials. And it also establishes a relentless approach to external benchmarking, which I learned is vital in procurement to help to understand where the money is. Now I'm going to be focusing on 4 key areas. A more detailed discussion on the challenges of price analytics, a demonstration of the ProcureAnalytiq system itself, a summary of the benefits for your business and potential next steps. This is a functional presentation, so it may at times be a little boring or slow. I have included in the timeline the various chapters so you can skip ahead, but you can also just speed up the playback. But please always feel free to contact me directly at the email address shown on the screen. So, let's dive in. So let's take a look at the fundamental challenge of price analytics. Now, if we look at the development of a price of a product or a category product over time, we're highly likely to see a fluctuating trend. And in the absence of any other information, we tend to see decreasing prices as a positive trend and vice versa. And if our sales prices stay constant, that conclusion is logical. But unfortunately, we live in a highly competitive world. And there are 2 reasons why this method to look at prices tends to lead to missed opportunities. The first is that your sales prices will tend to trend with the market development also. So lower raw material prices for you will lead to lower sales prices over time due to customer and competition pressure. Secondly, even if your prices are trending down, it may be that the competition is doing a better or faster job. Therefore, we need to look at raw material price developments in the context of market developments, wherever possible. And if you're able to plot the market trend, and your price trend line is above the market trend, it is likely that you're missing an opportunity. In summary, it is the gap between your prices and market trends that is the key indicator of success, as that translates to gains and losses of profit in a competitive industry. And in my example, if you evaluate performance versus the market, you will reach almost the opposite conclusion from looking at price development in isolation. That is, because in my example, the suppliers are quick to pass on their increases, but slow to give away decreases. A pattern I see all too often if businesses are not aware of market developments or critical feedstock pricing. Of course, the critical and challenging part of this equation is how to establish a useful market benchmark. Now, In general, if you know your volume is critical to suppliers, if you run regular tenders and switch significant volumes based on the outcome of the tenders, you can be pretty confident that your prices are in line with the trend of the market. But at best this applies only to part of your spend, depending on your business. For most other areas of your spend, you need to establish a market benchmark. And there are different ways to approach this. One of the most common ways is to look for data on the internet. And for some basic commodities and foreign exchange, that is relatively easy and free or cheap. The second popular way is to purchase market benchmark data. Now this is not always available and it is rarely cheap. But if your spend is large enough, or you have price mechanisms established with customers and suppliers, it is still a sensible spend. However, I do find that many companies buy market data, but are not structured enough in using it well. Other potential sources of market data are from industry market contacts, although it is usually anecdotal, information from suppliers, although they will rarely share anything with you that disadvantages them, or even the occasional due diligence process, giving you insights into market prices. Now, ProcureAnalytiq was designed specifically to help the process of finding the right benchmarks for different products or product categories. ProcureAnalytiq helps to establish two types of benchmarks. Ideally, we can help you to find a direct benchmark, where the trend and the absolute price of the benchmark moves and is similar to the price trend of the product you buy. The second approach is that ProcureAnalytiq can help you to establish a benchmark of critical cost drivers. Either just one or two critical cost drivers which make a part of the cost of the final product, or a benchmark that establishes a full cost comparison over time. Such indirect benchmarks may not be easy to establish, nor will they be a perfect fit, but they will nearly always result in significant insights. And with the use of some basic statistical analysis, you will reach actionable conclusions. So, let us take a look at ProcureAnalytiq. I'm going to cover 4 areas in ProcureAnalytiq and finish with a quick summary of what benchmarks are in the ProcureAnalytiq system and how to source other benchmarks. And we'll start by looking at how to set up data series in the ProcureAnalytiq system. Before I do the demo, it is useful to know what kind of data series would be loaded into ProcureAnalytiq. Any data series loaded by you into ProcureAnalytiq are only visible and available to you. And the types of data which would be loaded by you as a data series are, for example, price developments of a product or category, or any benchmarks which you have purchased or sourced by other means. In addition, you can add any data series which captures an unusual trend which you want to capture in an index or a price mechanism, such as an agreed quarterly price decrease or any other data. Unless you actively choose to share that specific data series with specific named users, that data is not visible to anybody else using ProcureAnalytiq. So, let's take a look at how to load a data series. So before we dive into loading a data series, a quick introduction to the system itself. The login link to ProcureAnalytiq can be found on the businessanalytiq.com website. You simply click on login. You can also store the address of the ProcureAnalytiq web application itself. The authentication as a user is managed by Google, so it uses Google authentication, which means you need a Google account to be able to log into ProcureAnalytiq. And once you're in the system, you get a number of menu options, which include the storing of the price indexes, which we'll cover in a moment, any shared indexes which have been shared with you by another user, service and help desk functions in case you get stuck and need some help, and also my subscriptions, which are a list of feedstocks or indexes which you would like to keep an eye on and be alerted on. So let's first take a look at the loading of a data series. So we click on My Data Series and we'll create a new data series, and we'll get to type in the name. In this case we will go for a data series of blue cement pricing. We will click Add, and that creates a blue cement option in My Data Series. We will click on that. Now the first area we can edit is the header information. So at any point we can change the name. We can also change the type of data series it is. It's either a price series, a series of absolute prices, or it is an index series, which is a price trend relative to a given date. In this case, my data is a price series, and we can change the currency. In this case, the data I have is in euros, so I will select euros. And there are 26 currencies to choose from, and ProcureAnalytiq handles the FX translation in the background. So we'll press on save. And then we will add the data in. Now, the easiest way to get started the first time is to simply click on the Load CSV File option. You click on that. That'll give you the option to select a file and press enter, and that will load the price points into the system. And if we can click on save, we can see a visual translation of that data onto the screen. We can edit any given price point, so we can make January 2007 4.8 and save that. And if you look at the bottom, this goes until March 2020. So if we wanted to add April 2020, we would simply add April 2020, and we would say the price has jumped up to 5.5, and we'll press save, and we'll see that appear on the chart above. And maybe it's worthwhile to note here that the prices in ProcureAnalytiq work purely on monthly averages, so it doesn't load daily, weekly, or quarterly averages unless those are expressed as monthly averages. So really that is all there is to it in terms of loading a data series. Maybe it's worthwhile to have a quick look at the structure of that CSV file so you can see what that looks like. And it really is just a set of dates and the monthly average, so that's a pretty simple structure. And I will include in the video right after this a short summary of where to find that file on my website. But for now, that's it. And if you want to find a sample of that CSV file, you go to the businessanalytiq.com website. Under the menu option ProcureAnalytiq, you'll see a how-to guide, and there you'll see an option for the input file template. You click on that, it's the first one on the list. You click there to download the file, and that will give you a blank copy of the CSV input file for your use. The next part of ProcureAnalytiq, which I will demonstrate, is how to set up a price index. A price index effectively is the comparison of one trend against another to come to actionable insight. The first trend we will capture is the baseline price trend, which is the price trend of either a product or a category or even a portfolio, which we will benchmark against either a direct market benchmark if that information is available. And if not, we will try to find an indirect market benchmark made up of critical cost drivers which are relevant for the baseline price trend. So let's take a look at the setting up of indexes in ProcureAnalytiq. The first thing we'll do is click on Create an Index. The system will ask us what series do we want to use as the baseline index. In this case, we'll choose blue cement. And what that means is that blue cement is the price series for which we are going to try and find a benchmark index. And that's why you see at the top baseline index blue cement and a space for a benchmark index. Now, there are two types of benchmarks we can create. One is the direct market pricing, if we have that information available to us. In the case of blue cement, I have it, so I type in blue cement market index. As it is a market index, it will match 100% of the value, and we will ignore forward and averaging for now, and I'll come back to that. I'll click on save, and the system will tell me that the correlation between my blue cement pricing and the market index for blue cement which I've found is 79%, which is a Pearson's correlation efficient. It's a pretty strong correlation. And if we look at the visual element of that, we click on the timeline tab and we'll see both lines plotted against each other as indexes, and the red line being our blue cement pricing and the blue line being the market index direct comparison. So that gives us a feeling for how the market is developing. Now, unfortunately, in many cases, we're not able to find a direct market index, in which case the best correlation we might be able to find is on the basis of some critical feedstocks or other cost drivers. So in the case of blue cement, let's take a look at what we can find there. So we will delete the market pricing here, and we will start adding in cost drivers that we are aware of. In this case, I happen to know that one of the key cost drivers of blue cement is the urea market pricing. It represents about 30% of the value of the pricing of blue cement. I'm going to ignore forward and averaging still, but I will come back to it. I'll press save on that. And if I look at the correlation now between the urea pricing and the blue cement final pricing, I get a correlation of about 64%, which is moderate. Effectively, it means that 64% of the variation in blue cement pricing can be explained by the variation in the market pricing of urea. In this case, I will also add phthalic anhydride, which I happen to have been told is about 25% of the value here. Now, I often get asked, how do I find the critical cost drivers? And the best thing to do is to talk to experts, either on the chemical side or on product design. Look it up on the internet, speak to your suppliers. My experience is dive in and get better, fine-tune as you go. Don't try and get it perfect first time. So we've added phthalic anhydride. We'll press save again, and we'll see that the correlation factor is now at 70%. And as it happens, I also know that copper is also an important cost driver for blue cement, so we will add in copper as well. Now, some of these benchmarks will be in the system, others will have to be sourced separately and loaded as a data series. We will press save now, and we get to a correlation of still 70%, just below 70%. Now let's look at the impact of the forwarding and averaging. So if we look at urea, on the forward option, we have to ask ourselves, how long is the time lag between the market pricing of urea and the market pricing of blue pigments? How long does it take for an increase or decrease in urea pricing to impact blue cement pricing? And in this case, it is easily 3 to 4 months. We'll pick 3 months. And then at the same time, we'll ask ourselves the question, what kind of monthly average do we want to put in place for urea pricing? And then if it is a forward option of 3, often it makes sense to take a 3-month average pricing just to eliminate some of the larger variances. So we'll press on save there, and then we'll press on save again. And what we find now is that we have a correlation efficient of 76% between the market pricing of 3 critical cost drivers of blue cement and the market pricing of blue cement itself. And if we take a look at the timeline there, first of all, we'll see now that because for the market indices for those 3 cost drivers, I have got data going back to January 2010, we get a longer timeline, and we can see that there is some correlation. It isn't as strong as before, as the pricing of blue cement doesn't quite follow the high troughs and peaks of the cost drivers. Still, it is a relatively strong correlation. In terms of correlations, my experience is that anything over 65% in terms of correlation starts to become usable. Ideally, you get over 70%. It's very rare for cost drivers to get over 80%. And that really is the process of setting up benchmarks. The next part of ProcureAnalytiq we will take a look at is how to interpret the results and share access to the indexes you've created. The main aim of ProcureAnalytiq is to lead to actionable insight, and we will cover this in the next demonstration of ProcureAnalytiq. So let's take a look at the interpretation of the results in ProcureAnalytiq from doing an index, and we'll continue with the blue cement example as we're already familiar with that one. So we've set up an indexing of the blue cement prices against a benchmark index comprised of 3 different cost drivers: urea prices, phthalic anhydride prices, and 5% copper prices as well. And that gives us a correlation efficient of 75%. Now that 75% means that 75% of the price changes in the blue cement can be explained statistically by the price changes in the benchmark index as comprised of these 3 cost drivers at these value percentages. So that's a pretty strong correlation. This is about as good as you'll find with critical cost drivers and feedstocks. I mean, there are many other impacts on prices, demand driven, capacity driven, and so on. But finding the critical cost drivers, the critical variable cost elements of a product, can explain up to 75–80% of the prices in blue cement, and it's worthwhile tracking those. If we then look at the correlation tab, we'll see another visual representation of that correlation, where we're looking for the blue dots to be as close as possible to the best fit line, which is shown in light blue. And the closer those blue dots are, the closer that correlation is. The next chart we'll take a look at is the index timeline. We've already seen that a few times before. That's a visual representation again of the correlation between the baseline and the benchmark index. And the benchmark index being comprised of the 3 critical cost drivers. I think so far we're familiar with that, but maybe a few things in addition to point out. The first is that if you have created an index of cost drivers which have a forward element in them, it'll give you the additional benefit at the end of the timeline to get a forward look into what the cost drivers are saying will happen to the prices of your blue cement or your baseline index. It's a forward look into the future, the next 1 to 3 months. And it can be a very useful early warning system of where prices are likely to go. And of course, if that is pointing down, that's a good time to push for price decreases from your suppliers. If that indicates up, it's time to consider your purchasing policies, your inventory policies, but also preparing yourself for tenders and pushback on requested price increases. So that's a useful factor of setting up an indirect benchmarking system with forward indicators. The other thing, functionality to point out is that you can also include some comments in here, so that you can store that for later if you've done some research that you want to capture for future reference. You can include it in there, and that's also visible to anybody that you've shared the index with. And again, that's a useful functionality. The other area to point out is that if you feel that the entire range of dates that you have for the chart is maybe a bit too much, you can limit the chart range here to maybe just the last 3 or 4 years. I won't do it now. I want to keep the full months visible for the demonstration, but that's a functionality that you can have. So if we look at this chart and we see a spike in the benchmark index, we may want to understand what is driving this spike. For that, we have a detailed chart where we can see for each of the 3 cost drivers, as well as the benchmark and the baseline index, we can see that there's a spike in the urea prices, which then also explains the spike in the benchmark index, which you can see in green here. And that gives you a visual representation of the trend of each of the critical feedstocks. Again, they've been indexed on the same date as the chart has been indexed, so they've set at 1.00 for the index date. If you're then curious on adding other lines or other indexes in that, you can add them into that chart. It's already a pretty busy chart, but still you have that functionality. If you want to plot the oil prices on that chart, you can do so. And here it is in the aquamarine color. So it becomes a pretty busy chart. On the other hand, it's sometimes a useful visual reference point. And of course, you can add comments to that as well. The next chart maybe I'll jump into is the cost timeline. And what the cost timeline shows is a breakdown of the costs of the benchmark index. So this is no longer an index. This is now in absolute dollars or euros or whatever currency you've indicated. It's set in the currency of the baseline index. So in this case, we set that to euros. So this chart is in euros. And it shows to the level of cost of the cost drivers together. And this is a useful chart if you want to do a full costing and understand how close your cost drivers come to the full costing of the tool. This cost timeline only works if in the index you are using a baseline index which is set on price and cost drivers which are set on price. If that's not the case, you will not be able to see a breakdown of cost simply because one of the variables in the tool is set as an index and not as a cost. But still, it's a very useful and also interesting chart to take a look at. Right, we'll jump to the alert tab next, and this is one of the most important tabs because this indicates the degree to which the two variables, the benchmark and the baseline index, are operating within normal statistical behavior or whether they're going out of sync. In this case, the black line represents the variance between the baseline and the benchmark index. So in the case if the baseline is well below the benchmark index, we can see that that variance has gone well below and out of the green boundaries, which are the normal statistical operating range. And the way to interpret this chart is that if the black line, the variance between the benchmark and the baseline, are operating within the green lines, it's operating within a certain normal statistical behavior. And there is no reason to believe that prices will significantly go up or down in the short term because they're essentially in equilibrium. Now, of course, there may be other reasons for prices to change, but the cost drivers in themselves shouldn't justify a price change. On the other hand, if the black line goes above or below the green lines, you can expect price changes. And if the black line goes above the green line, you should be demanding price decreases in your blue cement or in your baseline. But if the black line goes below the green lines or outside the green boundaries, you should be expecting price increases to be pushed for by your suppliers. Now, if the black line goes outside the yellow or even the red lines for any period of time, that means that there is an issue with your index, but you certainly can expect a relatively rapid price adjustment process if it goes out of bounds, simply because there's a correlation issue between the benchmark and the baseline indexes, which is outside normal statistical variation. So this is a pretty pertinent chart in terms of keeping an eye on to see whether the indexes are operating within normal behavior. Two other areas to take a look at. The first is the data chart, which is a summary of all the data, and you can copy and paste this into Excel and do additional analysis if that's what you wish to do. The final part of the area to look at is the share option, and the share option enables you to share your analysis and your data with another user in the system. Now they have to be a named user in the system, and you type it in the system. So if you want to share your work, now the people that you share it with will be able to see the analysis. It will appear for them under their My Shared options, but they will not be able to make any changes to the data. So they'll have a full view, ability to read, but they cannot make changes to any of the data. And so you can discuss it with them or ask for their input and so on. So that's an overview of the different tabs and the different results that ProcureAnalytiq provides you with. One final demonstration that I will cover today for ProcureAnalytiq is on two topics where I often get questions. The first is on the foreign exchange translation and also the importance of setting the right index date. So let's take a look at ProcureAnalytiq. So let's take a quick look at two of the less intuitive elements of the ProcureAnalytiq system. The first is the way the system handles foreign exchange, and we'll continue with the example of the blue cement. Now, for those who've watched the video from the beginning, may remember that the blue cement data series was actually in euros, so this is a euro price series. However, the index, as I've set it up, was on the basis of three different cost drivers, which were denominated at a US dollar price. So the way the system handles the foreign exchange is that it will translate the cost driver currency into the baseline currency at the monthly exchange rates as applicable at the time, and therefore it eliminates the FX impact in a consistent basis in the background, and the user does not need to worry about the FX impact. The second element to focus on is the importance of the index date. So as part of the system is working on an indexing system, it uses the index date to set all the indexes at 1.0. In other words, it sets all the price developments relative to the prices at a certain date. And you can see that both on the index timeline. You can see that also on the detailed chart of all the different cost drivers, and you can also see it on the alert chart, because at the index date the variance is set to 0. So what is where you don't see it so much is the cost timeline, because that isn't an index chart. In other words, it shows the absolute prices and cost development over time. But what you would find is that at January 18, at the index date, the cost drivers would equal exactly 60% of the prices of the baseline. So that's how the index date expresses itself on the cost timeline. So what is a good date to set the index month? The best way to explain this is to pick the most recent date at which you believe the baseline and the benchmark indexes were in equilibrium. In other words, it may be the last time you did a full tender and got the best possible prices. It may be the last time you got a major price decrease. It may be the time you switched to a new supplier who was aggressively pricing your product. So it is the last date at which you believe that the blue cement prices are a fair reflection of the underlying cost drivers. And that is important for a number of factors. The first reason is because it will define the behavior of the alert chart. In other words, on the alert chart, we tend not to look backwards so much. We should be looking forwards to seeing the behavior from this date. And if we haven't set the index date at the correct kind of starting point to reset it to 0, we may get a chart that isn't as meaningful. For example, if we were to set that chart, the index on July 2012, that chart wouldn't work anymore effectively. So if I now save that, take a look at the index chart, you can see now it's been indexed for July 2012, and now we see a gap opening up between the benchmark and baseline index. And the alert chart will show a benchmark and a baseline which is effectively out of correlation and out of sync since that time. So that's not a good date to set. The best date to pick is the last date that you believe that the baseline prices are a fair reflection of the underlying cost drivers. And in this case, I've set it at January 2012, and that means we keep an eye on the variance between the two indexes since January 2012 to make sure they stay in equilibrium. It's maybe worth reflecting slightly longer on the importance of this percentage change. So what this indicates is the percentage change in price required to bring the black line back onto the perfect equilibrium spot between the baseline and the benchmark index. So in this case, the variance is 0.022%, which means a price decrease in the baseline blue cement prices of 2.2% would bring that black line right back onto the 0 percentage line and bring the benchmark and the baseline into perfect equilibrium again. And there is another way you could use this index. You could use this index not as a tracking tool, but as a pricing mechanism. So you could agree with your supplier that you will track this index on this basis. You will agree the source of the data, and you may load your own data sources for that. And you may agree that from 2020 January you will track the index and include it as input into your quarterly price negotiations. And then you may agree certain rules on how to deal with increases or decreases in the cost drivers. And this may not be a practical example, but in some cases you may want to build in a tracking of one or two of the critical cost drivers, which are commodities and for which prices can be reliably found, and both yourselves and the suppliers can agree on using those critical cost drivers as input into a quarterly or monthly or twice annual price negotiation. So that's one way you can use the system, and that is partly reflects the importance of setting the index date correctly. It is clear from the demonstrations that the benchmark data in ProcureAnalytiq is a key element of the functionality of the tool. So here's a quick summary of the data which is maintained in ProcureAnalytiq. There are basic commodities and chemicals for which price data is maintained on a regular basis. There are currently about 350 series, and we're constantly adding new data series. In addition, in the core package there's also a database of key economics and statistics drivers, which are useful in certain price index or price mechanisms. In addition, we also offer support to help you search for other data sources, both direct and indirect. And we're pretty good at it. You'll be surprised at the benchmark data we can source for you. So let's do a little summary of the functionality of ProcureAnalytiq and how it can benefit your business. ProcureAnalytiq will help with different types of analysis. The core functionality, which I demonstrated earlier in this video, is the creation of a benchmark index either for a raw material or for a category of products, and the statistical analysis that will help you to analyze the outcome and decide on the best course of action. The second area, which is critical, is the additional insight gained either of direct market benchmarks or of critical feedstocks of your suppliers, and that visibility will help you to manage not only risk but also price. The third area is the early warning system, which becomes apparent if you establish a market indicator based on critical feedstocks, as it will give you an early warning of coming market changes. And finally, ProcureAnalytiq is designed to help establish and track a price mechanism with your customers or suppliers, to help reduce the risk and frustration of quarterly negotiations. So what are the benefits of your business? There are 5 main areas of benefits. The first is the reduction of effort in procurement, as it simplifies and improves the process of tracking critical trends, especially for those areas which are not bought in bulk. The second benefit is an early warning of coming changes, which will enable you to engage with suppliers early, signal to the internal stakeholders of likely changes, and give an early warning of significant market disruption, enabling you to understand and impact earlier than the market. The third area of the benefit is the increased ability to explain trends to the stakeholders, be it the board, sales colleagues or supply chain teams, or even internally within procurement and purchasing. This will help understanding of the market and anticipate potential price risks. Effectively, the whole business becomes more responsive to market conditions, one key element of commercial excellence. These benefits will lead to the key benefit of better financials through better ability to negotiate, holding suppliers accountable, or the ability to see changes and manage risk more clearly. And finally, this system helps to establish a relentless approach to external benchmarking, a critical habit to get into. If the contents of this introduction resonate with you, let's briefly discuss how to move forward. My preferred way of working with you is to set up a project to establish benchmarking models for your business and work together to find the right data, as well as train your users to establish a new way of working. Once that project work is completed, we're always happy to maintain the model for you and make a dedicated team member available to support you with analysis. But you will not need our help if you prefer to manage it internally. We also offer support in different ways. Sourcing benchmark data, either direct or indirect, or just provide user licenses for you to have access to the system and the core dataset and allow you to develop your own data sources in addition to those in ProcureAnalytiq, as well as set up unlimited benchmark models. There are different ways for us to engage. My preferred way is to set up a free one-to-one discussion about your business, but you are very welcome to join a regular monthly webinar with a Q&A session, do a free 2-week trial, or just read the information on our website. In terms of next steps, the easiest way to reach me is at the email address on the screen, but you can find other shortcuts to reach us on our businessanalytiq.com website. And if you've made it to the end of the presentation, thank you for your time. If the contents have in some way resonated with you, we would love to hear from you. Thank you.